Um, let's also get into a conversation now on the kind of flows that we're seeing currently. We've got investors flocking to equity markets, sharp spike in new DEMAT accounts. So what's really going on and what's the trend? We've got Ajay Menon joining us from Motilal Oswal, as well as Nikhil Kamath from ZERODHA. Gentlemen, thanks so much for being with us. Ajay, now the April to June period witnessed, a lot higher retail investor activity. We've clearly seen that in the data. Has that traction now continued into July? Are you seeing the makings of a larger trend here? Sure. Ajay, that was for you. I was trying to understand, in terms of the trend that you're picking up in retail investor activity and the sharp spike that we saw in April to June, is that spike continuing in July so far? Are you seeing, the making of a larger trend? What's the outlook looking like for the brokerage industry currently?
Yeah, the last quarter rally was really phenomenal, and it is actually in July we can see the rally continuing, not at the same peak, but I don't see any downfall as such. Based on the corrections, yesterday you saw corrections went low, but the overall trend is still on, and I think that has to do with the mid cap and the small cap rally, which typically brings in the retail participation in a big way. So that is continuing. Plus, the rally in the global markets, I think that entire correction there has gone off in the last 3 months, which is showing the trend in India. So we are anyhow catching up when you look at the overall market growth, right? When you look at international markets. So the trend is continuing, and we can see the cash market volumes growing because of the mid-cap, small-cap rally. And surely some good data points in the domestic economic data in June. I think that has also led to the revival in the BFSI sectors, which is the high weight in the Nifty, as you know. So that is also showing some volume growth. Hello.
Okay. And, that's on volume growth. Let's also get Nikhil in as well. Nikhil, in terms of the kind of traction that you're seeing, run us through that. Also within the modes of trading activity, we've of course seen a lot more action when it comes to mobile trades as well, with investors flocking to equity markets. So do you see further emphasis as well on mobile, on digital, and that also helping to boost further volumes?
Hi. So the trading will continue to, move away from traditional platforms like EXE-based platforms onto mobile and web platforms. We see this trend continue. In terms of the account opening and the new investor interest, which is coming into the market, I think it's a factor of many things. A lot of it has to do with the interest rate cycle, how quickly interest rates have gone down, and bank FDs no longer are as appealing as they once used to be. And I think the plateauing real estate yields that we have witnessed in the last 5 years have not left many avenues for a retail investor to seek alpha. So this trend of people coming into the stock market, I think, is set to continue. And with time, we would expect to see further participation from retail participants.
Okay, so you are expecting to continue to see that trend. Ajay, or Nikhil, let me continue with you for a moment. How are you managing the platform? Are you, looking to also make any changes on the back end to cope with the massive flow of investors as well, that you're expecting to see?
Ahead of time to ensure we have significant capacity in place to make sure we are able to facilitate trading seamlessly. And we continue to do so and look at any means by which we can improve the efficiencies of our platforms.
Sure. Ajay, what about you? How are you adapting to the kind of trend that we're seeing here? And are you also seeing a certain demographic of investors, perhaps? Is it the more millennial-driven, rage that we're seeing right now with younger investors looking to also get into equity markets, given the current rally?
There is a good interest among different sectors, different millennials, and we can see the people, the new to market people also coming in a big way. If you look at the accounts being opened by the discount brokers, it's showing new to market people which are coming in. And that is good for the overall market when the total number of investors are increasing rather than the same investors going to different brokers, right? So there is a trend to new investors coming into the market. We can see that very clearly. At the same time, the volumes on the mobile side has gone up drastically up. We are seeing that increase at our end also, more than 50% growth on the mobile volumes in the online. Overall, online itself is growing, and within that, the mobile is growing up in a very, very big way. So, in spite of this, COVID has only helped us in increasing our online volumes in a big way. So, we have a very big setup already for an offline model, and this has helped us in increasing our online volume in a big way, which I think is here to stay, even in the change scenarios post-COVID also.
Right. Nikhil, there's clearly been positive exuberance, if I can term it as that, and sentiment reflective in the higher trading activity that one has seen in the last 2-3 months. In your opinion, are millennials really driving the rally, or you think that the trend is positive and buoyant across all age cohorts?
The trend is buoyant amongst many age groups, or all age groups for that matter. We have seen the average age of our investor drop from 32 to about 30, but I think one has to bear in mind that retail investors will be well advised to stay away from small cap companies, penny stocks, which one might end up buying based on a tip and SMS messages and stuff like that. People will be a lot better placed if they actually, allocate a significant portion of the new capital coming in to large cap quality companies. I think this is something new investors should bear in mind, and that will be beneficial for the entire ecosystem as well.
Sure. Ajay, the turnover of small individual clients has rocketed over 140%. What's been the behavior in this client segment according to you? Are these more of trading communities, or would you think it's long-time investor money which is finding its way?
It is multiple factors which are coming in. One is that they are sitting idle at home post-COVID. So they have taken this as one avenue to start trading. So the trading volumes have gone up in a big way. Second is that the mid-cap, small-cap rally. So typically, retail comes in there. So I think there is a lot of trading interest and short-term momentum interest rather than the typical long-term investment, because fundamentally we know that the economy is going through a bad phase and it is going to take some time for the economy to recover. So people are trying to play the momentum in this rally and try to see how they can get the best buck out in the smaller, shorter bit time. So there is more interest on the momentum-driven rally, I think, rather than on long-term investments, because the small-cap, mid-cap rally typically talks about trading. And the cash market volumes have also gone up, which in a sense also says that because of the small cap and the mid cap rally, the cash market volumes have gone up. So I would typically say it's a more trading momentum driven rally rather than a fundamental long term buy and hold kind of stuff.
Sure. Nikhil, you know, the recent AMFI data indicated a dip in equity flows for mutual funds, with HNIs particularly moving out of mutual funds. How are you assessing the flows in mutual funds as well as the SIPs category? And do you somewhere see focus shifting to alternate fund managers instead?
Part of the downtick in the flows that AMFI recorded, I think a certain part has to be attributed to the liquid fund exits that we saw because of declining interest rates. We do see people going into the alternate funds, and this is a certain category of people which generally falls in the HNI and the ultra HNI bucket. But with a lot more time at their hands, I think many retail investors are also choosing to go the direct path and kind of avoiding the inefficiencies that a typical asset management company might have brought in by virtue of having a lot of fees and middlemen in between. I think markets traditionally have been forward-looking. Market prices more reflect what will happen a couple of years down the line and not necessarily the earnings and the news flow of today. The same might be repeating right now. It looks like investors are looking beyond the crisis and what might develop once the crisis is over. And we seem to be very closely linked and following the global indices in a way, because they might be at a more evolved state of the coronavirus because they had the peaks, or they had a lot more exaggerated issue of corona there earlier than we had in India. So it's very hard to question price action, because traditionally markets, when they have moved ahead of news events, more often than not have been right. And I guess only time will tell if this move has enough legs to hold on into the next year or two, or if it doesn't.
Sure. Ajay, Nikhil, both of you, thank you so much for taking the time out and speaking with us, really giving us perspective and digging deeper into retail participation, which has clearly been on the uptake.